The Kyoto Protocol, of course, which seeks to stabilize greenhouse gas concentrations in the atmosphere at a level that prevents dangerous anthropogenic interference with the climate system, leading to the Paris Agreement, which seeks to limit global warming to well below 2 degrees, and preferably to 1.5 degrees Celsius. Also, I'll talk a little bit at the very end about what this means for what we expect to happen in Glasgow. But before we do this, we actually need to step back about half a century and go to Stockholm on June of 1972 during the first United Nations Conference on Human Environment. And essentially, the conference took stock. It was the first time that the conference took stock of the global human impact on the environment, and actually attempted to forge a basic common outlook among all the parties that were present. There were a number of key provisions that came out from the Stockholm Environment Conference. These are listed on the screen. I won't need to go through them. But quite importantly, later on, about 20 years later, at the United Nations Conference on Environment and Development, commonly known as the Rio Earth Summit, there were further additions to these key provisions. Okay? So in essence, the precautionary action was added, as well as common but differentiated responsibilities, a very important provision based on equity, also public participation, the concept of interference of trade and environment, importance of indigenous peoples and women in development. So all these actions were actually under what I call this establishing a new equitable international agreement to deal with key global issues. So it was the three global issues that generated conventions at the Rio Summit were, of course, the UN Framework Convention on Climate Change, the UN Convention on Biodiversity, and the Conference on Desertification. So these were the three that were brought forward. But today I'm going to focus, of course, on the UN Framework Convention on Climate Change. Now, the UN Convention on Climate Change, convention is commonly called, entered into force on the 21st of March in 1994. And the goal was actually, as I mentioned, the stabilization of greenhouse gas concentrations. But the latter part is important as well, because it sets out or begins to set out the relationship between the developed and the developing countries as it pertains to the convention itself. The idea is, if you look here, within a time frame sufficient to allow ecosystems to adapt naturally to climate change, ensure that food production is not threatened, and to enable economic development to proceed in a sustainable manner. Now, these are important to developing countries because, once again, we understand that the process of mitigating or reducing emissions actually does come at a cost. It can come at a cost. And there are issues associated with land use that might actually interfere with food security and food production. So these key aspects of developing countries were actually captured in the convention. And this is probably not a convention that's ever going to be agreed again by as many countries that have now agreed to it and are committed to be bound by it. Okay? So if you look at the key provisions under the convention, the first one really is differentiation on the basis of equity. And this is where, this is what gives us the principle of common but differentiated responsibilities. Essentially, the convention established three categories of signatory states. First of all, developed countries, which are parties included in the annex, in the first annex, Annex 1 of the convention. Developed countries with special financial responsibilities, which are a subset of Annex 1. These are the developed countries that are wealthy. And their names are inscribed in the second annex called Annex 2. And then there are the rest of the developing world, which are simply referred to as parties not included in Annex 1, which by virtue then makes them not included in Annex 2 as well. Now, the commitments on these different categories of signatory states are also very interesting. First of all, for all parties, regardless of whether you belong to an annex or not, there are established emissions reductions and reporting commitments. So everyone has to try to reduce emissions, everyone has to report. But in addition to this, Annex 1 parties have a commitment to limit their emissions under the convention. And this term is not used anywhere for the developing countries. Yeah, developing countries have to reduce, but there is no limit, right? In addition, the wealthy developed countries, those included in Annex 2, have commitments to provide support to the developing countries, right? So the first thing you might think of is, why do we have a convention that treats developed and developing countries so very differently? After all, if you look at current annual emissions by states, isn't the largest emitter China? Aren't there other developing countries that have fairly high per capita emissions as well? Well, the answer lies actually in the fact that the greenhouse gas concentrations in the atmosphere are the product of continuous cumulative emissions over long periods of time. And if we look at this particular figure, which goes back to 1751, we see that the largest per capita emissions occur in the US, and of course in Russia, and in some other parts of the world. All right. There's a very good graphic that displays this, and it takes this form. Here we find the North America, all right, and this is the US here with 399 billion tons. We have the 28 EU countries here, and then we have Asia here on this side, and Africa, South America, and Oceania off to this way. Now, if you look at this, it looks like nothing stands out really, okay? But when we add some numbers in, then we begin to see some patterns emerging. First of all, the US is only 4.3% of the global population. This was in 2017, the end of the period for which data is included in this figure. If you look at the whole of the EU 28, they have 5.8% of the global population, all right? And then you compare that to China, who have almost 20% of the global population and have had a large population for a long period of time. And so this actually serves to illustrate the actual emissions per capita of a country over a long period of time, which is actually what contributes to the greenhouse gases in the atmosphere, and that's what contributes to climate change. Even looking at this, sometimes I think you don't really get a good perspective of this. So there's another graphic that I like to pull up now, okay, which gives you a little bit more of an idea of what it actually looks like on a scale when the EU is broken up into its component countries, right? So we have the very top here. I don't expect you to read the names because it's very small, but just to give you a sense, the US at over 300 billion tons CO2 is 3 times almost the level of cumulative historical emissions of the next country, Germany, followed then by China at less than 100 billion tons CO2. And Malaysia is somewhere down here in 42nd place, right? So cumulative emissions, historical emissions, these are the reasons why the convention actually takes the view that they have. If we look then at Article 4 of the convention, which talks about the actual commitments, we find that the sub-articles are broken down very cleanly. Okay, Article 4.1 talks about all parties having to report their inventories and implement mitigation measures. Article 4.2 singles out Annex 1 parties and says they shall limit their greenhouse gas emissions. To what end? To return to 1990 emissions levels. And incidentally, emissions haven't returned to that level yet for the developed countries, right? There was an agreement to review the adequacy of these commitments at the first COP, 1995. And then no later than the fourth COP in 1998, to review them again, all right? And based on these reviews, take appropriate actions, including changing the commitments. Article 4.3 talks about how the wealthy developed countries, Annex 2 parties, shall provide not just financial support, but new and additional financial support, which means it cannot include foreign aid or any other kind of development funding that was provided earlier to developing countries. It has to be new and additional. But as I'll show you later, this has actually been watered down quite a lot. Article 4.4, the next one, requires the wealthy developed countries to assist particularly vulnerable countries in adaptation. Article 4.5 talks about the commitment to provide finance for transfer of technology and capacity building to developing countries. Article 4.6 refers to flexibility for some economies in transition, some of the Soviet satellite states. But there's a good reason why they've saved Article 4.7 close to the end. Article 4.7 essentially establishes the linkage between the commitments of the developed countries and the ability of developing countries to meet their commitments. Okay, essentially the article says the extent to which developing countries will effectively implement their commitments. Remember, we have a commitment to reduce emissions, not limit them necessarily, but reduce them, will depend on the effective implementation by developed country parties of their commitments related to financial resources and transfer of technology, and will fully take into account that economic and social development, as well as poverty eradication, are the first and overriding priorities of developing countries, right? So you may wonder why in our nationally determined contribution, Malaysia has an unconditional component of a 35% reduction in emissions intensity of GDP, and an additional conditional component of 10%. Okay, that is to be consistent with this sub-article in Article 4, Article 4.7. So we, in essence, are giving the developed countries an opportunity to fulfill their commitments under the convention to provide support to developing countries to meet their emissions reductions commitments as well. All right. So the convention has not changed in terms of the signatories and the ratification. It's enforced today for all parties, including the United States of America, even through this period that they've disassociated from the Paris Agreement. Okay, all parties have remained, all countries have remained party to the United Nations Framework Convention on Climate Change. Right? And the convention gives you the what of how the global community is going to address climate change. We then come down to what are called the legally binding instruments, the hows, which the mechanisms through which the convention is going to be implemented. And the first that we agreed to was the Kyoto Protocol. We negotiated and adopted it on the 11th of December 1997. Essentially, the Kyoto Protocol operationalizes the convention to limit and reduce greenhouse gas emissions in accordance with agreed individual targets. Now, these are the limitations, the targets for developed countries. And essentially, during the first commitment period, which was going to be from 2008 to 2012, developed countries that were party to the Kyoto Protocol would reduce their emissions by 5% relative to 1990 levels. And in the second commitment period, the period actually should have ended last year in 2020, to reduce their emissions at least 18% relative to 1990 levels. Okay, the understanding was thereafter we would have subsequent commitment periods with further emissions reductions levels relative to 1990 levels, until such time we agreed that perhaps other countries would graduate, perhaps the countries in the annex, listed in the Annex 1 and Annex 2 might change as countries became more wealthy. But that was the understanding, that was the paradigm, the mechanism that we all adopted, right? And this is the Kyoto Protocol that we negotiated. Now, we then turned to the Kyoto Protocol that we actually implemented. The protocol entered into force in 2004. The US signed it but did not ratify it. Unfortunately, other countries also renegotiated their reference years as well as their targets. Okay. When the implementation of the first commitment period began, we began negotiating the second commitment period. Developed countries continued to push developing countries to take on targets. So we first took on nationally appropriate mitigation actions on llamas, okay? And finally in Copenhagen in 2009, even as parties were working on developing an agreed outcome, a secret 3-page document known as the Copenhagen Accord was being drawn up by a small group of developed and developing countries. And the announcement was made to the press, and an agreement had actually been reached even before the closing plenary had begun. The presidency presented the Copenhagen Agreement to parties on a take it or leave it basis, and when developing country negotiators refused to adopt the Copenhagen Agreement, developed country negotiators actually threatened to withhold climate financing. This was definitely a low in the climate negotiations. But eventually, we did have a second commitment period. Unfortunately, the Doha Amendment, which is the second commitment period of the Kyoto Protocol, entered into force only 90 days from the 1st of October 2020, which means the second commitment period of the Kyoto Protocol entered into force after the end of the second commitment period. The second commitment period was also bad in the sense that once again, the US did not ratify. 3 developed countries, Japan, New Zealand, and Russia, did not take on legally binding targets. And Canada actually withdrew because it knew it would face crippling fines for failing to meet its targets. So what have we been negotiating now are actually the rules and modalities for the Paris Agreement. In 2015, we adopted the Paris Agreement and it entered into force the following year, on the 4th of November 2016. But the objective is slightly different. To hold the increase in global temperatures to well below 2 degrees if possible, and to pursue all efforts to limit temperature increase to 1.5 degrees. The key characteristics of the Paris Agreement: first of all, it remains under the convention and its principles. It provides flexibility to developing countries that need it, but very, very importantly, unlike the Kyoto Protocol, which adopts a bottom-up approach, the Paris Agreement, unlike the Kyoto Protocol, which adopts a top-down approach, the Paris Agreement adopts a bottom-up approach to emissions target setting, where each party actually sets their own targets. The Paris Agreement technically is still under negotiation because the modalities, procedures, and guidelines for Article 6, which is international cooperation, have not been completed in terms of negotiations. What are the legal obligations under the Paris Agreement? Very few. First of all, to communicate your nationally determined contribution every 5 years. Second, to report your progress using the transparency mechanism, which is fairly detailed. And third, to participate in the global stocktake. Okay. So in summary then, through time, the convention and its principles have remained in force. They still remain in force now, regardless of which instrument is being used to operationalize it. However, the legally binding instruments that operationalize the convention have radically changed. The developed countries have successively, over time, watered down their obligations. And this has resulted in reducing emissions to a legally binding target. So they don't accept any legally binding limitations to their emissions. They've watered down their obligations to provide finance, technology transfer, and capacity building to developing countries. Also to assist developing countries with adaptation measures. And in calculating the finance that they provide, they now include finance mobilized as legitimate climate finance, as opposed to finance provided. So this means that loans, loan guarantees, and other kinds of instruments can actually be counted or are actually counted by developing countries or by developed countries as being legitimate climate finance. Okay. On the other hand, concurrently, developing countries have been burdened with far more onerous reporting requirements. We have to communicate the nationally determined contributions alongside developed countries. we also have to report achievement of progress alongside developed countries. Okay, some people call this a leveling of the playing field. But if you look at the current development status of many developing countries, I don't think you will find that it's a very level playing field at all. In addition, what we see also is a growing trend of involvement by non-party actors or non-party players. These include the private sector and civil society, as well as youth and children's groups, women's groups, gender issues. And these present a unique opportunity actually for the private sector to play a defining role in driving transformation to address global climate change. So my time is up, I believe. I thank you very much. And what I would like to do now is to call on Mr. Amar Singh Gill from BlackRock to make his presentation. I'll stop sharing my slides now and invite Mr. Amar to make his presentation entitled Understanding the Increased Expectations of Directors in Managing Climate Risks. Mr. Amar, the floor is yours.
Thank you. Thank you, Dr. Gary. And thank you, Puan Rahaya and Sunita. I'm a fellow Malaysian. I've been out of Malaysia since 2001, working in Singapore and Hong Kong. Currently I am with BlackRock for almost 3 years now in the role of investment stewardship for the region. So what I would like to speak about is how BlackRock is looking at these issues, what BlackRock is doing, but also in the context of why it matters for corporates. Corporates in developing world, emerging markets, as well as much as corporates in the developed world. I think why it should matter for corporates and managers, there is a problem in terms of the horizons, the timeframes of managers and the incentives that managers have. You know, your bonuses are based on your performance for this year, the company performance for this year. CEOs might have a 5-year target for what they achieve, what they hope to achieve for their companies. But sustainability issues are long term. They're not something that will see, you know, significant impact within 5 years. So there is a bit of a horizon problem, time horizon problem. But the reason why I think all corporates should be taking this seriously even now is really just 3 words: cost of capital. Our chairman, Larry Fink, and I will go through some of the quotes that he has, considers that we are now at the cusp of a significant reshaping of finance, significant reallocation of capital, where the flows into sustainability funds, high ESG funds, far outstrip the flows into traditional funds, where companies like BlackRock have a 10-year target of increasing our sustainability funds by 10 times over 10 years, right? Whereas our traditional funds grow at 3 to 5% a year. And that significant flow of funds into sustainability portfolios means that the companies that are eligible to be in the sustainability portfolios will see flow of funds and higher valuations, lower cost of capital. And the companies that are not eligible to be in these sustainability funds will see a higher cost of capital and lower flow of funds. And that ultimately is the reason why today these developments that have, you know, decades to play out is still relevant to corporate managers today, cost of capital. And for investors, for asset managers and asset allocators and asset owners, the horizon also has to extend. If you're an asset owner with a fiduciary responsibility for managing pensions, then your horizon obviously is the long term. And BlackRock, I will explain in a second, also has a very long-term horizon because of the structure of our funds. And I'll elaborate on that in a second. But the key issue is that stewardship and sustainability really are interlinked. You know, the role that I play within BlackRock in the stewardship function is interlinked with sustainability, because if you're thinking about long-term value creation, well, if companies are not sustainable, if their strategies and policies don't follow sustainability principles, then there is no long-term value. So stewardship and sustainability really go hand in hand. I'm just told that my video was not working. Hopefully my video comes back soon. Yes.
Yeah, your video is on now. Thank you.
Thank you. Okay, thank you. So let's go to the slides, into the next slide, which is a little bit about BlackRock, right? BlackRock's not very well known in Malaysia. Some people in my family still confuse my company with Hard Rock, but it is the largest asset manager globally. 8.7 trillion US dollars in AUM as of December 2020. If you look at the pie chart on the right, essentially just over half of our total AUM is in public market equities. And within public market equities, it's about 90% that is in passive funds, as some people call it. We call it index funds. And that's because even in the index funds, we take the stewardship, we manage the stewardship actively. And I'll go through that in some slides. But given that we are a significant and huge passive investor globally, our time horizon is very similar to controlling shareholders and the long-term funds. As long as the company is in the index, and we follow the MSCI index, generally speaking, as long as the company is in the MSCI index for Malaysia or for ASEAN, or if it's a bank that is in the regional bank index, or if it's a utility which is in the regional or global utility index, then almost certainly BlackRock is a shareholder, and BlackRock will remain a shareholder into the indefinite future as long as these companies are in these funds. So our horizon is not year-on-year profits, but honestly into the long-term, what is the value creation that the company can generate. If you look at the next slide, this is now quoting our chairman CEO, Larry Fink. And Larry is a founder of one of the 8 founders of BlackRock. 5 of them are still active within the firm. Since the global financial crisis, Larry started writing letters to CEOs of investee companies. And in the last 3 or 4 years, those letters have got quite a bit of publicity and profile. Now, 3 years ago, in 2018, Larry's letter emphasized purpose. And his main point, which is I've put in bold at the top, is that purpose is not just a tagline, it's not just a marketing campaign, but it's the fundamental reason for being for the corporate. Why, the why for corporate existence. Mission, objectives is the what and the how, but the why, what fundamental social need does the corporate provide for, that's the purpose. And that's what we think that companies should be focusing on. It gives a sense of direction, a rudder for corporate strategy, and the risk that the company will take is provided by the purpose that the company identifies. And so Larry's been emphasizing purpose for a couple of years. Last year, in his letter 2020, he put the emphasis on climate change. And what he said is that he has seen various transitions in financial markets, but what is happening now with climate change is bigger than anything else he has seen over 40 years being in financial markets. That even if a fraction of the changes that are projected happen, this will have significant impact on companies globally. And companies, as well as investors and governments, need to prepare for this change. And his words were, we are at the cusp of a major reshaping of finance and a change in the shift of in the cost of capital for companies that get it and for companies that don't get it. Now, these letters are on the website. The 2021 letter came out about 10 days ago. And in the 2021 letter, he continues to emphasize that climate change is the single most important factor for asset managers to be considering and to be integrating in their investment process. So what is BlackRock doing about this specifically? That's now the next slide. There is a big issue about ESG data. I think we all know that. If you look at the correlation of ranking on ESG ranking of the data providers, MSCI, Sustainalytics, FTSE, and so on, the correlation is very, very poor. And the reason the correlation is very, very poor is that the data provided by the companies is very, very bad. Some companies provide data for just parent company, not for the group. And if you're a Hong Kong company providing data for what you're doing in Hong Kong, but 90% of your business is now in China, then what you're providing, the data for Hong Kong is very misleading for the total impact that the company is having on the environment. So data is a big issue. Lots of companies simply do not provide data. And then the third-party ESG rating companies would have to extrapolate or interpolate from what they see in other companies in the sector, and then they extrapolate for companies that do not provide the data. So for us, we think it is crucial that companies provide data which is reliable and accurate and material. And the framework, sustainability frameworks that spell out the data that's most relevant, we think come from TCFD and SASB. I think most people know about TCFD. SASB is American, Sustainability Accounting Standards Board, but their standards, they are looking to globalize their standards and not to make it very American-centric. And I think now about a quarter of the companies that are reporting by SASB are outside the US. And the reason why we think SASB is globally relevant is that they have reporting frameworks specific to 77 different sectors. So you might be a mining company, you might be a utility company, you might be a bank, you might be a consumer manufacturing company. For 77 different sectors, SASB has consulted investors to come up with the data that's most relevant for each of these 77 sectors. And so if all companies report by SASB, then that data that is being used by MSCI and Sustainalytics and the other rating agencies for ESG becomes much, much more reliable. And so that is why BlackRock is urging our investee companies to report by both TCFD as well as SASB. And in the latest letter that Larry has sent out to CEOs 10 days ago, we are also urging our investee companies to come out with a business plan, a business model that is compatible with net zero by 2050. Now, what is compatible? The expectations are higher for companies in the developed world. The expectations are a bit lower for companies in the developing world, which are just starting the journey. But we would like to see companies thinking about how we get to a net zero world. And in the developing world, the way I would look at it is that the strategies and the capital expenditure should not be inconsistent with bringing down emissions. In other words, if a utility company is setting up a new coal-fired power plant, which has a life expectancy of 40 or 50 years, that will lead to increased emissions beyond 2050. And we would have an issue with that kind of capital expenditure. So we want to see how this business model compatible with net zero is incorporated in the long-term strategy of the company and reviewed by the board. Now, if you look at the next slide, Larry and the ExCo of BlackRock also came out with our net zero commitment. Now, essentially, BlackRock is a corporate. We are already carbon neutral in our operations. So our data centers, etc., are using renewable power. Our travel is offset by carbon offsets. And we are looking, of course, what they call scope 3, you know, the emissions coming from the investee companies that we have. And as I mentioned, we are looking for companies, like our investee companies, to have a goal of getting to net zero by 2050. 3 aspects of getting there. 1, measurement and transparency. We will be publishing a temperature alignment metric for all our funds, our equity funds and our bond funds. We will be publishing the percentage of our total AUM, which will be aligned to net zero. And we will track the investment portfolios in how they're heading towards net zero over the next few decades. And year on year, we'll be tracking how it's getting towards net zero. Then on investment management, we will incorporate climate change into our capital market assumptions. What that means is our cost of capital, cost of equity, our discount rate will reflect a higher risk premium for companies that are in carbon intensive sectors, but are not doing anything to bring their emissions down. They will have a higher discount rate when we are looking at their cost of capital and their cost of equity. And in our active portfolios, we will have a heightened scrutiny on companies in these high intensive carbon sectors where they are not doing anything on their carbon impact. So those, it's not that we will have none of these companies. What we did last year is any company with more than 25% of revenues from thermal coal is not going to be, is already out of all our portfolios, our active portfolios in fixed income and in equities. We will, you know, we've already divested of anything that has more than 25% in thermal coal. Beyond thermal coal, other sectors, these are companies where if they do not have a business model aligned towards net zero, they will be put on a higher watch list, and essentially active portfolio managers would have a higher bar to justify having these companies in their portfolios. And then stewardship, the role that I have in this region for BlackRock, and I will go through a little bit on the resources we have globally, but in our engagements with senior management and board members, we will be asking companies on their business model to mitigate climate risk and for them to be considering both the risk and opportunities that are coming from, you know, the net zero transition. There will be increasing votes on shareholder proposals that relate to sustainability, and where directors, you know, where companies are not even providing disclosure on baseline emissions, you know, where they're not providing data on scope 1, scope 2 emissions, then we will start voting against directors for the lack of disclosure on relevant material information for companies in these carbon intensive sectors. So those are the new commitments from BlackRock. What BlackRock has been committed to on sustainability for the last couple of years, there are 5 aspects, 5 pillars of sustainability at BlackRock. Investment insights, we have a think tank called BlackRock Sustainable Investments, and they look at the trends on sustainability. They do the papers on whether you're giving up returns if you have a high sustainable, high ESG portfolio, and how it correlates with risk as well and volatility of portfolios. In our investment processes, in the last 2 years, we've already integrated ESG criteria into existing portfolios in the non-ESG funds as well. Sustainable solutions, we will come out with new products, high impact, impact funds, etc., that push the agenda. Investment stewardship, I'll explain a little bit more, but that's the voting and engagement that we do with corporates. And then corporate sustainability, what BlackRock as a firm does to make sure that we are a responsible corporate entity. And essentially, as I've mentioned, we are already at net zero in terms of our own operations. The next slide is investment stewardship. Essentially, investment stewardship, if you look at the bottom, we are fiduciary for millions of final clients. BlackRock's exposure to companies, it's not BlackRock owns 2 or 3% of whichever company you might see our name against. We are the managers for the portfolios, and the owners are, it could be pension funds, it could be endowments, it could be retail investors. But our fiduciary responsibility is to ensure that the companies are being run for long-term value creation. And we do that through engagements with companies, trying to meet directors to determine how boards make the decisions. And we use those engagements to shape our voting when it comes to AGMs and EGMs, etc. So the investment stewardship team is the team that does the voting. And it's my team that will be voting against directors if they are at companies that are in the carbon sensitive sectors, but are not yet providing disclosures we're looking for. Next slide. Our stewardship team globally, we have over 50 people in the 3 regions. That's the biggest stewardship team globally of any of the asset managers, whether you're looking at the other index fund providers out of the US or the active managers globally. In Asia, APAC, we have 15 now, spread out. Tokyo as a team of about 8. We've got 5 people here in Hong Kong, 2 in Singapore, 2 in Australia as well. And as I say, even in this region, we are the largest team for investment stewardship. And the next slide, our key engagement priorities. This is going to be updated in the next week or so. But when we do engage with companies, we're looking at board quality, in other words, processes and structure and composition of the board, diversity, tenure of independent directors, etc. That's one, it continues to be a big and important part of our engagement topics. Environmental risk and opportunities, corporate strategy and capital allocation. Now, I think this is the most significant part of our engagements for companies in developing markets where the NDCs are not yet that ambitious, but every 5 years, NDCs get updated, and most countries will probably be updating their NDCs this year before the COP in November in Glasgow or Edinburgh. And as NDCs get more ambitious, the question is how boards plan for their capital expenditure and the potential risk of stranded assets. That will be a major issue in our engagement topics with companies as well. And then we look at compensation. We try to make sure that incentive structures, bonuses and options, etc., incentivize management towards the long-term value creation. And human capital management, the S side of ESG, which is getting increasingly important with the issues of COVID and the pandemic. And so my final slide is, there is a lot of transparency. Almost everything that I've talked about is on our website. Larry's letters are on our website. You can Google Larry's annual letter, and you'll get each of the ones for the last 10 years or so. Our voting guidelines are on the website. Our position papers, our commentaries on how we engage on natural capital, on human capital management, on labor rights, etc., and our voting history. So every quarter we publish on our website how we have voted on any and every company's AGM and EGM where we have voted. And we vote 100% of shares that come up for, where the meetings are coming up. And we publish vote bulletins on the more high profile and contentious voting items. Last year we had 57 vote bulletins globally. And in APAC that covered Indo-Food, ICBP, there was a controversial related party transaction there that related to also First Pacific, their parent company in Hong Kong. And we did a vote bulletin on Wheelock, which privatized itself from the market in Hong Kong. We did a vote bulletin on Kepco in Australia, on the banks, NAB and ANZ. And at the start of the year, we also did a vote bulletin on Top Glove for an issue that I think you are aware of. I will stop there for our presentation on what BlackRock does on sustainability, why it's so central in the way we look at our investment processes, and how the stewardship team contributes to our sustainability initiative for the firm. Thank you.
Right. Thank you very much, Amar, for that presentation. Good afternoon, everyone. We've come to the point in the proceedings where we're doing a Q&A session based on the two panel presentations. I'd like to start firstly by thanking IRC and CGM for inviting me to moderate this, this particular panel. Now, brief summary. I think you've heard a lot from Dr. Gary about the history of how we've got here. And I guess the main takeaway message I'm hearing is that it's very difficult to get lots of people to agree to things that they don't want to do. So it's interesting to me that really why there is probably more awareness and pushiness going on is really not because of the governments, but because of the people. So of course, Greta Thunberg, retail, consumerism, and so on, is actually driving the agenda now, which is why the governments feel a bit more empowered to push these things along. Then, of course, we heard from Mr. Amar Gill, who in a way has put it out very clearly that it's actually a good thing as an investor to be looking at these matters. He's explained why BlackRock looks at this as a long-term issue rather than something short-term. But if I sense from what they're saying, they're not going to just simply divest things. They intend to use their position to influence people to do better. And I think certainly from the plans that he's outlined, from Larry's letters, that comes out every year, and the current challenge, which is explaining your plan, is all intended to give them a chance to do better. But of course, there's always that threat. If you don't behave after a while, then BlackRock will have to take certain steps. So that's a brief summary. Now, I just want to highlight to you that there is a Q&A box that you can put your questions in. And I see that Dr. Gary has been diligently answering all of his questions. So I'm not sure there's very much to ask Gary, really. And of course, I'm starting to see questions there also for Amar. So maybe what I might do is just scan through the answered questions to see if there's any points to maybe to add on, really. So just looking through the answered questions, Dr. Gary, how can small businesses do their part? I think is one which Gary has answered, essentially saying that, well, really, open your eyes and do little bits, really. And in fact, he's even offered, that you can actually talk to him directly about what you can do. Do we think carbon emissions in developing countries are accurate? Well, I think Dr. Gary has given a very politically correct answer, which is not sure.
No, would you like me to take that? Be happy to
Yeah,
take
please.
that. Yes, okay. Actually, there's a fairly high degree of confidence in the accuracy of greenhouse gas inventories of all countries. Even the least developed countries, and some of the countries where you would find it quite difficult to obtain some kinds of data. But if you look at the emissions that are related to fossil fuel use, you find that actually the production, importation, consumption of coal, of gas, and of petroleum products is actually very highly instrumented, and it's very, very tightly measured and regulated, both by the producing countries as well as the consuming countries. And if you translate all those essentially to, if you make assumptions about how much is actually burnt, you get a fairly accurate estimate of how much greenhouse gas you produce. So in terms of the fossil fuel use, it's a very, very high degree of confidence. You might get by with some fugitive emissions, maybe from some gas production, where you might have leaks in pipelines and things like that, or you might have CO2 that comes up with methane and things like that that are released. But even those are actually a part of the greenhouse gas inventory. So fugitive emissions are taken into account. Where it does get a little bit hairier or trickier is in the area of land use and land use change. But what we've found out is that remote sensing is a wonderful tool to actually verify if what you believe you're reporting to be correct on the ground is actually the truth. And we now have sub-meter imaging that can even determine exactly how old your stand of oil palms is. Is it a 5-year-old stand? So we can even back calculate when the land might actually have been clear and bare, and when the forest was converted. So all these things put together actually build a lot of confidence in the level of accuracy of the greenhouse gas inventories.
So then if you kind of bring it to local context, what is the commitment that Malaysia has given in terms of the 1990 levels?
Okay, so because we're not, because we are not in Annex 1 of the convention, we did not have a 1990 based target. So what many developing countries did was they set reference years that were slightly more relevant to their current development. If you think about some of the graphics that I showed earlier about historical cumulative emissions, whether they began in 1751 or they began in 1851, you still had Malaysia there. But who was in charge of Malaysia at the time? When did we actually gain our independence? All these issues actually come down to what are truly the consumption-based emissions. And this was a hot topic a few years ago. People started to look at, well, China's emissions are high, but it's because they're producing everything for the rest of the world. And in particular, they're producing the greatest amount of consumer items for the developed world. Okay. So so in a sense, then to try to come back, I would say that we're actually doing a fairly good job, and we'll be able to if we focus properly on where our emissions are and how we might be able to reduce them, we would actually be able to achieve a fairly good bit of our nationally determined contribution.
Sorry, maybe I missed the point, but what was our voluntary?
Oh, it's 2005. Okay, the nationally determined contribution is to reduce the emissions intensity of GDP. It's a measure, it's an index that's used by many developing countries because the first task really is to decouple your economic activity from your emissions. So if you look at the emissions intensity of GDP, or the amount of emissions per unit of GDP per capita that's emitted, the idea really is to bring that level of coupling down so that you can actually grow the economy without growing emissions. So the target for Malaysia has two parts: an unconditional part where we aim to reduce the emissions intensity of GDP by 35% relative to the emissions intensity of GDP in 2005 by the year 2030. And there's an additional 10% on top of that that's conditional on receiving financial support, transfer of technology, etc., from developed countries.
Okay. Now, this ties up to one of the later questions, but so what I'm hearing from you is that the Malaysian targets are not binding in the sense of being in the appendix, but there is a court case which was recently taken by 4 NGOs in France, where they basically found the French government essentially guilty of not complying with the commitments they had given. So, I mean, could such a scenario happen here, that someone takes the Malaysian government to court, or not?
Yeah, thank you for the question. And it's given me a bit of an opportunity to explain also. It's fairly complicated because while the Kyoto Protocol was legally binding in its commitment periods, okay, it was legally binding throughout its first commitment period because it came into force before the commitment period began and went all the way to the end of the first commitment period. In the second commitment period, which was supposed to be 2013 through 2020, all right, we did not have a sufficient number of parties ratify the Doha Amendment to let the second commitment period enter into force. As a consequence, the slide that I had at the end of the sort of morose ending to the Kyoto Protocol was that it actually entered into force after the second commitment period had ended. So we finally achieved enough ratifications to allow the commitment period to enter into force, but it was after this protocol essentially had expired. Now, under the Paris Agreement, I said there are 3 legally binding obligations. The first is to develop and to communicate your nationally determined contributions every 5 years. note, very importantly, that that does not mean that you're legally obligated to achieve your nationally determined contribution. You are merely required to submit it, and then you're required to report on progress toward achieving it using a rather substantial transparency mechanism. All right, and then you're supposed to gather all the information together, and everyone is supposed to go to an aggregate global stock take to look at global progress. So once again, we're not, it's not a legally binding instrument like the way that the first commitment period of the Kyoto Protocol was, where if you weren't in compliance, you would actually have to. Now, under the Paris Agreement, it's not as if there's no compliance. If you do not submit your nationally determined contribution, you actually do have to submit it as soon as possible, and then you have to have a show cause letter and the sort of explanation. Okay. So it's a bit of naming and shaming going on.
So basically, it's more through, as you say, naming and shaming rather than legal aspects. Yes. Anyway, so maybe Mr. Amar, coming to you, because there are quite a number of questions also up on the Q&A boards. I guess maybe just starting from the top. Well, actually, there's a general question: is this recorded? I think it is, and I think later maybe Sunita can explain how people can get a copy of the recording. The one addressed to Mr. Amar: to encourage more companies to adopt, net zero emission policies, should the host government take the first step in announcing its own national ambition? So I guess that presupposes that Malaysia is not anywhere close as a country to announcing it. But of course, we have seen corporates like Petronas and so on. So Amar, do you think that would be a good expected step, that the country itself takes the first step?
Yeah, I mean, there are various agencies and regulators that have a role to play. And certainly, to get there, it's not just the private sector alone that will get there. The public sector and multinational agencies and the Global Climate Fund is all important parts of the jigsaw. From our perspective, if you go back to the disclosure standards that we are trying to encourage companies to report by, TCFD, and TCFD is asking companies to provide governance, metrics, targets, and the targets that TCFD is recommending, they're not being very prescriptive. So the targets there could be carbon intensity of operations. So I think if regulators, the listing rules in Malaysia and other markets encourage companies to report by TCFD, then the companies will have to come out with these targets. And as I mentioned, for developing markets, it's not absolute reduction that we're looking for in emissions, but we're looking for carbon intensity targets to start coming down.
But what about countries? I mean, we've seen China announce their 2060 target. I think there are other countries in the region considering it. But do you think that that's something which our own government should consider?
Well, I'll take Korea as an example. So there was the election, I think it was the parliament in Korea about middle of last year, and President Moon's party basically won on a platform of green development. And following that, there has been significant push by the corporates as well. And in November last year, KEPCO, which is the Tenaga equivalent in Korea, announced that they will stop doing any more coal-fired power projects anywhere in the world. Prior to that, they were doing coal projects in Indonesia, in Philippines, in Vietnam, South Africa, and so on. In November, they've announced no more greenfield coal projects globally. Now have a look at what the Korean market has done. Since early November, KOSPI, between early November to end of last year, the KOSPI went up 30%. That is an indication of what happens to markets when global investors get the message that the market is taking ESG issues seriously, and the global sustainability funds and the ESG funds decide this is a market I can and should be increasing my exposure to. So in the fourth quarter of last year, Korea was the stellar performer in Asia.
Right. Dr. Gary, I noticed that you're typing up an answer to one of the questions, or at least it says you are. But maybe you could share with us, I mean, this question about, if I was trying to find a way where you typed it up, or maybe it's under the answered bit now. So the question
move around, yeah.
was really around COP26 and our reporting. Would you like to kind of just share your thoughts on that?
All right. Parties are required to update the nationally determined contributions. And pretty much updating a nationally determined contribution means essentially capturing more and more of the initiatives and policies and programs that the country has put in place toward achieving a particular NDC. So in terms of the update, it's the job of the focal point, the ministry, in our case, CASA, to put that together. And I believe that they're working very diligently on that to get it done. It's important to distinguish between an update to an NDC and a revision to an NDC.
Right.
If you are going to revise your nationally determined contributions, that means you are going to change perhaps the targets that you intend to achieve or the quantum that you intend to achieve. And that's not what is currently called for, although there's a lot of confusion. Now, governments nowadays, regardless of whether they're in developed or developing countries, find themselves caught between, sometimes the business community and civil society, sometimes between the Greta Thunbergs, and Cox. Sure. It's a far more open platform now with all the social media and everything that's at our disposal, and governments actually finding it much easier to feel out the pulse of the nation when it comes to dealing with these issues. So, frequent flash floods, droughts,
Sure.
The haze, all these things actually push citizens of any country, Malaysians in particular, to actually begin holding the government accountable for these things, and getting the message across.
Tying into Mr. Amar's point that if other countries like Korea have actually had a positive benefit by the country itself determining a net zero target, is the Malaysian government considering something similar?
I'm not part of the Malaysian government, so I'm not competent to answer that question. But I will say that even net zero is a concept that is already controversial, because you can be net zero by reducing your fossil fuel based emissions to zero, and you can get to net zero by maintaining your fossil fuel emissions, but then in huge plant ups to the level of land that you forest. It's going to take a lot of forested land to offset a single ton of emissions. So there's a full spectrum of what people tend to think of as net zero, and some of it is has environmental integrity, and others is actually just greenwashing. And I noted very recently that if you were to believe all the countries and all the businesses that claimed they were going to be net zero, and actually instead of counting on some novel technology, we're actually counting on nature-based solutions such as tree planting, there would conceivably perhaps not be sufficient land to plant all those trees, while at the same time producing enough food to feed the global population. So there's some real concerns about the feasibility of simply throwing out a net zero target out there without some due consideration of actually how you're going to achieve that. Whether it's going to be attacking the fossil fuels, whether it's going to be removing carbon from the atmosphere, or whether it's actually going to tie up other resources that humans need to survive.
So maybe the last point would be to Mr. Amar. I think there were a few questions which, if I kind of combine it basically says that you've essentially announced that you're going to be looking at people's plans. The question would be, how would BlackRock go about doing this? I mean, are you doing it all internally? Are you outsourcing it? And to some extent, would there be some degree of engagement with those companies before you make a decision?
Well, the stewardship team at BlackRock, we have 50 odd strong globally, of which 30 are voting analysts globally. We do about 3,000 meetings a year. In APAC, we do about 1,000 meetings a year. A lot of it is phone calls. Obviously in the last 12 months, it's almost entirely webinars and phone calls. But that's the scale of engagements that we do. But obviously, so we can cover 2,000 or 3,000 companies of our total portfolio. We have about 16,000 companies in our equities portfolio in all the various products. So inevitably, we also need to use the data from data providers. And that's why there's this big push for the data providers to get better data. And a basic, question from the data providers is whether the company is reporting by TCFD and by all 4 pillars of TCFD. And that's what we'd like to make sure all companies are doing.
Great. Well, I'm sorry we've not really done justice to all the questions that have been put up, but I can see that some of them have been answered as we've gone along. So I guess we'll leave it at that point, and I will now hand back to Sunita for the next section.
Thank you so much. Thank you so much, Dato Faiz, for moderating this excellent session. Dr. Gary, Amar, if you are staying on, then please help us to answer the questions in the chat box in the Q&A section. Thank you so much for your time. Now it gives me great pleasure to introduce Karina Litvack. She is the founder of the World Economic Forum's Climate Governance Initiative. And this fireside chat is going to be moderated by Dato Sri Johan Raslan. I'll leave it with the both of you now. Thank you.
Right, well, Assalamu alaikum, a very good afternoon, everybody. Lovely to be here. Thank you very much to Climate Governance Malaysia and the Institutional Investors Council for inviting Karina and me. And Karina, lovely to see you. Fantastic to be here with you indeed. Well, we've heard from Amar and Dr. Gary, and that's fairly macro sort of stuff. Just to introduce a bit about Karina. Karina is a corporate governance and sustainable investment expert, 25 years in the business, probably maybe a bit longer. You're French and Canadian, but you live in the UK, but you are a board member of an Italian major company, sit on the risk committee of that company. You're also a member of other boards and advisory bodies, including the board of directors for Business for Social Responsibility, Global Advisory Council of Cornerstone Capital, and the Transparency International UK Advisory Council as well. And you founded Climate Governance International, which I'm going to ask you about. So, personally, Karina, how did you get into climate change, climate governance? What was your motivation there?
Thank you, Johan. Well, as you noted, I spent the first 2.5 decades focusing on this and other issues as an investor. However, when I retired from the investment world and was nominated onto the board of an oil and gas major, and I should say this was by the institutional investors, they chose someone who would bring this perspective onto the board of ENI. What I discovered, and it was really humbling, was that it's a lot easier, and I don't say this to criticize Amar because I was in exactly that position. It's a lot easier as an investor to demand that boards take this on, understand it, own it, drive it, than it is to do. And this is what I found. I found that there I was sitting in the boardroom and having to approve major capital investment decisions, and I did not have the tools to do what I knew I needed to do. I just didn't have the ability to make the case for why one deal should be changed, altered, refused, etc. And so I resolved to do something about it. The investors, meanwhile, were knocking on my door and demanding to see evidence that all directors had this competency. And I realized there's a gap here. And if I can't do it, having done 25 years on the financial side, then surely it must be very difficult for everybody else.
Okay, then you founded Climate Governance International. So what is it? Is it an NGO, a movement? What is it?
You know, it's not an NGO in the classic sense of the term. What it is it's an association of non-executive directors from all over the world. It takes the form of, firstly, the World Economic Forum acting as convener and host, and commissioning the development of a set of best practice principles, basically 8 principles that tell directors what a good board should do. And they're very comprehensive. They're really written from the standpoint of, what does this committee do? What does that committee do? What should we be doing differently? What are our legal obligations, etc. And then setting up chapters in the field so that actually there's a practical way for directors to learn this stuff and put it into action in their boardrooms. So Sunita was the second chapter to come on stream, and she's transformed our movement by giving it a presence in the region, and not just in the region, but really enriching the global initiative with some excellent ideas and contacts and so forth.
I have a very basic question to ask you. I'm kind of embarrassed to ask you this one. Is it climate change? Should I call it climate change or climate emergency? I see them both talked about.
It's unquestionably an emergency. And unless it is understood as such, I think most boards will struggle to understand why it's their problem rather than something that government in the first instance should figure out, set laws, and they will comply. If it were that simple, we would have solved this a long time ago. It really is something that requires government to do everything it can, not just the national government, but working with others, with other governments and intergovernmental bodies and so forth. But we can't wait as business leaders to hear from government what we will be asked to do, because it is an emergency. The house is burning down. You're not going to wait around to be given the instruction manual. You grab the fire extinguisher.
Well, that's kind of often goes against the sort of Asian way. We wait for government. Government will do, and then we will do what government says, or maybe half do what government says. So we can't really wait around. Is that right? Okay, we've heard from Amar that climate change is, certainly for his company and a few growing others, the single most important issue. Well, now, of course, as you said, you are now on the other side of the fence. And so tell me a bit more about the challenges you met in the boardroom itself, the practical side.
Well, first of all, to concur with Amar, it is the single most important issue. If we get this one wrong, all the other important issues, frankly, are irrelevant. So, and I'm grateful that BlackRock has taken on this issue, because it answers the question you asked me. The biggest problem I had when I started out 7 years ago on my board is that my colleagues looked at me and said, listen, I don't deny the science, but the policy community is not where the scientific community is, and we have to run our business for what the law says today, not for what we wish the law would say today. Second, it's really only a fringe group of investors who are raising this issue. Well, the moment that BlackRock started to say that this was important, I guarantee you the mood in the boardroom changed. I'm very fortunate that I had a CEO who's a scientist and understood this, but he too was up against, a huge machinery, not just in his own company, but in the global economic system that made it challenging to make change.
Well, yeah, and we've seen our own Malaysian national oil company Petronas setting a net zero target just in the last few months. So things are moving. Then moving down more granular, if you like. You're now on a risk committee of the board, and I suppose the risk committee must be the key committee for pushing this agenda, because it's supposed to look forward. And anticipate threats. So what can the risk committee in a company do a typical Malaysian public listed company, medium size, do to tackle climate if they've not already addressed it? I'm not saying that Malaysian companies haven't, but maybe there's a few haven't.
No, I mean, the problem is not unique to Malaysia. I mean, my company's an Italian one. If you looked at our register when I joined the board 7 years ago, climate change was on it. It was on it, but we like I think most companies, you have that grid with the y-axis and the x-axis, probability and impact over a 4-year cycle, 4-year planning cycle. And the kind of traditional tools for risk management, for reasons that I could not fathom, generated a result where climate change was not a high level risk. It was always in the bottom right-hand corner. And I kept thinking, there's something wrong with our machinery if it is telling us as an oil and gas company that climate change is not a highly material risk. And the problem was that the system was taking into account what the law says, what public pressure is telling us. Because we were one of the best performers by the standards of the oil and gas company, we weren't getting as much pressure as others. Basically, we could continue along the path of, responding to the pressures that we were experiencing, and the business model would not have changed. And so it wasn't until we had a complete shift in culture that the risk committee was able to appreciate that this was not an operational risk, not a compliance risk, not a reputational risk, although it is all those things. It was an existential risk. Our company could be put out of business by the arrival of an upstart with a product that delivers exactly the same outcomes that our clients want: heat, cooling, light, mobility, power for their industry, without the emissions. And it wouldn't necessarily come from another oil and gas company. It could come from Google. I mean, I'm saying, and so when you're sitting in the boardroom, you really have to take the blinkers off and look very wide. Who could put us out of business? Are we going to be the next Kodak? The very nature of disruption is that the human brain is not wired to plan for it. And yet we have to. And so really, my message was, we could be put out of business if we don't figure this one out, and we have to change our product in order to stay current and competitive.
Right. Well, Karina, people in companies need templates, need guides, standards. Now we're all driven by ISOs and SOPs and God knows what. So I was looking for documents to assist me as an independent director in this area. One of the few I can find actually is that World Economic Forum document. I think you alluded to it at the beginning. And I'll read out I have to read because it's so long, the title: How to Set Up Effective Climate Governance on Corporate Boards. So tell me, look, is this one yet another? Tell me, do I have to bother reading this? Is this another airy-fairy, kind of thing up there that doesn't actually, I can't use it practically, or something? Is it a practical document and therefore I'll make an effort to read it? What do you think? What's your?
Look, my number one problem is that I had no how-to manual. I did not know what I needed to do. This is the how-to manual. Now, it doesn't go into the level of detail that we yet need, and which is why we created the Climate Governance Initiative to deliver practical training around each of these issues. But it's the starting point, and the answer is yes, you must read it. It was developed with you and me in mind. I mean, I looked at this thing. I didn't write it, otherwise I wouldn't brag so much. I was one of the people who, kicked and screamed for it and said, give me something that tells me what I should do. What should I do in the risk committee? What should I do in the remuneration committee? What should I do in the nominations committee? What should we do when we are on our strategic planning away day, when we're looking at the 4-year rolling plan? How do we look at the 10-year plan and the 30-year plan, and how do we tie these together? It was really looking at all the constituent parts of what a board director needs to do tomorrow when he or she goes back to work. And then what we do is Sunita and all our wonderful colleagues around the world put together training sessions where we sit down and we figure out how scenarios need to be understood and taken into the boardroom and fed into key processes like risk management, audit, of course, strategic planning. And those together then have an influence on how we set the key performance indicators for long-term reward. You also want to look at your human capital. I mean, all of these issues ultimately hang together. And frankly, I can't think of a single board task where there isn't a climate lens that needs to be applied.
You seem like a very persuasive person, Karina. So, and I'm sure when you are back to when you first started to raise this on the board, it can't have been like everybody said, "Oh yeah, straight away, you're absolutely right." Surely you had to persuade, use tricks of the trade to influence people. Because, as you say, you had a CEO who was quite keen, but maybe, I'm not sure, maybe other members of the board, chairman and so on, that might not have been how, and this must be mirrored throughout companies all around the world, including Malaysia. So a bit of advice maybe to a bit further on how to influence other board members.
Well, first of all, this was not easy. I ended up being that person who was saying the thing that people felt was annoying and repetitive, but you have to do it, and it's not about being deliberately annoying or repetitive. It's about finding the moment, the style, etc. A couple of things. I figured out who was both, apart from the CEO and chairman, who was the most influential individual on that board, because we're not all created equal on boardrooms, and we know it. And he was also the most obstructive. And I thought, if I can convince him, there will be a big leap. And he was put in a position where he had particular influence on this topic. And I just said, I'm here to help you. I'm here to do whatever you need to help this committee be more effective. And I was just constantly, in a very constructive way saying, one way that you could take this is to present it in this way or ask that question. Sometimes he felt threatened, but what I did was put him in a position of looking good. That was the first. Actually, that was the second, because the first thing was to have a conversation with the chief executive and ascertain what his level of awareness, openness, and courage was. And he just did very well on all three. So we were both of us up against the same thing, which is inertia. And it's not that, thankfully, it's not that we had a board of anti-science denialists, which I have to say, I've met plenty of those. It wasn't that. It was really just inertia. It was someone else will have to move first. It was, we have a lot of business priorities that we have to focus on. We'll get to this in agenda item 11, And then it was, to your earlier point, working with each of the committees and the staff to shift the way things were done so that this issue was given the proper attention. Ultimately, and our chairman, who initially wasn't particularly fussed one way or another, had a history, in fact, of being, in her previous roles, if anything, on the, shall we say, not in the right place on this issue, was mobilized by our chief executive. And she's actually the person whose face is on this climate governance initiative. She was the one who put her signature on the letter to the chairman of the World Economic Forum saying, Mr. Schwab or Professor Schwab, could you please be the home for this initiative? She did it. And so, what I wanted as a director, I wanted to be able to point to something outside of us to say, look, this is what best practice says. The World Economic Forum has said so, and we're not doing it. So we need to close those gaps. And without that kind of framework out there that I could point to, it was impossible to win the argument, because we were already doing pretty much everything we were supposed to be doing, and we were getting high marks for it. It's just that the world wasn't going to change, or we weren't going to change the company if we continued on that path.
So did you then have to commission or do a study that established the impact of climate change in the future on the company, and then establish a strategy that comes out of that?
So the way we did it is we brought in, as committees often do. I now chair, but at the time I was only a member of the committee that looks at scenario planning, and that also was given the additional task of sustainability. So it was an interesting pairing. And at the time I wasn't chairing it, but we would regularly get outside experts to come and present to us for half an hour. We brought in the co-chair of the drafting team of the Intergovernmental Panel for Climate Change. Okay, his half-hour slot lasted 2 hours, not because he went on and was boring, because we were fascinated, because he made such a compelling case for why this was important. And I have to say, he's an economist. He's not, a financial analyst. He didn't come and tell us what our company was going to experience. He presented the macro picture, but I guarantee you could hear a pin drop in the room. And at the end of it, they said to him, well, Professor, what do you think we need to do? And he said, listen, you're the board director. I'm just an economist. You take this away and you figure it out, which is of course true, but we did. And really it was, to be fair, it was the chief executive who basically took the bulldozer and pushed it through. If he had proceeded at the regular pace that, the board was inclined to do, it would have taken us another 10 years. It's the truth.
Well, thank you for that. No, it's useful to hear how it actually worked in practice with you. But well, look, where are we today? We're in the middle of a pandemic, COVID crisis. Most companies are really focused on corporate survival right now, and the working from home doesn't help. That people are very disjointed and can't have these chats in the corridor right now on other things. It tends to be very focused on the meeting at hand. This preoccupation, look, I'll put the point of view too, that this preoccupation with climate change, surely it's a distraction, it's a luxury, it's a first world problem. We're not first world, we are Malaysia.
Yeah, I've certainly heard that objection. Well, look, I've heard that objection many times. In fact, the first meeting that I had where I met Sunita, that was the dominant response from a group of non-executive directors in Malaysia. You guys created this problem. Do not have the presumption to tell us that we have to fix it. And I have a lot of sympathy with that view, when you have serious problems of poverty, etc. The problem is we don't have the luxury to ignore this. And yes, it's true that the West created the problem. Yes, it's true that the West has to foot much of the bill to solve it, more than its share of the bill to solve it. And it's the reason you see the European Economic Union setting targets that are above its own share of reduction. It wants to set the example, and it acknowledges that some countries will not be able to move as quickly as necessary. But we simply, we cannot say it's a distraction. And in relation to the pandemic, I have to confess to you that apart from the fact that I was worried about the pandemic, and I have a daughter who works in the COVID ward, she's a doctor, I was seriously worried about the pandemic. What was remarkable about this health crisis is that it revealed how fragile we are, how fragile the global economy is, and how quickly our perception of risk can be transformed when we see the results of a risk that was poorly managed, even though everyone knew there was pandemic risk. No one could quite grasp the seriousness of this risk. Does that sound familiar? Costs were cut to invest in the preventive measures, and the greatest damage is the domino effect that it has in the economy. So in my company, we had an excellent pandemic response plan that goes back to the years of SARS, bird flu, Ebola. And in January of 2020, our chief medical officer put out the alert across the business. And, we activated all of the protocols to protect staff, to protect contractors, to institute working from home, et cetera, et cetera. We've lost an extremely low number of people. However, our pandemic response plan wasn't able to prevent the global collapse in demand for petroleum products. And that's the issue. It's not just managing or mitigating the risk as it is perceived. It's the secondary effects, the systemic effects that are devastating. And that is exactly the story of climate change. And so certainly in the case of my company, I mean, I remember when the crisis broke out, we literally announced our climate transformation strategy on the 28th of February, which was the eve of Italy going into lockdown. We had to cancel our in-person presentation and deliver it online. So that's how, the symbolism, I think, is overwhelming. I said to my CEO, whatever you do not lose focus on this thing, on climate change. And if anything, the pandemic is a reason to accelerate, because it has really sharpened our focus on the risks, on the implications of unmanaged systemic risk. And that's exactly what we've done. He's gone out publicly and said, we're slowing our CapEx and all the traditional upstream activities. We are not only not slowing the investment in clean energies and biorefining and recycled and biochemicals, et cetera, we are accelerating that.
So basically, So when we used to say, "Oh, that's the worst case scenario," normally that meant something that is just never going to happen. But the worst case, well, it has happened, and so
exactly.
This can too. Another thing you've mentioned, you and I were both directors, so Sudita. In the past, you've mentioned legal risks
Yes.
for directors, and this is, of course, something that tends to get our attention fairly quickly, because unless we like being sued for some reason. What are the legal risks for individual directors that you can see, over the horizon? That worst case scenario, that never happens, that one.
Right, you're right. I'll just start by saying that when I first had this conversation with directors, around the world, and I remember one particular conversation of an American director who served on both American and Canadian boards. And she said to me, look, I would be in breach of my legal obligations as a director if I left profitable business on the table for our competitors. So effectively, you're asking me to take into consideration issues that haven't yet crystallized in terms of regulatory drivers, competitive drivers. You're asking me to think so far ahead that I could be compromising the current performance of my company, and I don't want to get sued. So I thought, okay, we have a big problem if smart directors, influential directors like this one, see it through that lens. And so I talked to a bunch of lawyers to say, what is our responsibility to take account of wider systemic risks that have yet to appear in the regulations? And they looked at me in amazement. They said, of course it's your responsibility to do that. It's your job to do that. Failure to do that is a breach of your responsibilities. Your job is not just to comply. Your job is to think ahead. And so actually we worked with some lawyers around the world to produce legal opinions that essentially said, based on what current law says and has always said about the legal obligations of directors, and overlaying onto that the overwhelming knowledge about the risks of climate change. When you have Mark Carney, former governor of the Bank of England and chairman of the European Stability Board, and the now current Christine Lagarde, and the current Georgina, I forget her last name, of the IMF, when you have all these major global financial multilateral bodies saying climate change is the greatest risk to global systemic financial stability, you have your answer. The environment in which we operate as companies has changed, or rather, it hasn't changed. Our awareness of it has changed, and as board directors, we have a legal obligation to, first of all, acknowledge this, because if we were to turn around and say a few years from now, oh, but I didn't know, no, we would never be believed. It is absolutely everywhere, and it is incumbent upon us to take the necessary actions. If something poses a material risk, we have to act on it. It's that simple. So we have legal opinions. We're in the process of producing a legal primer with opinions from around the world that effectively explain to directors that it's your job to do this. Failure to do this could get you in trouble.
Okay, it's all dwelt on the gloomy and the doom and gloom. Can you see hope in all of this? Can the human race, companies, the planet win this?
Yeah, I do. If you'd asked me this question a few years ago, I would have struggled to answer that question in the affirmative. But I get a lot of hope from the fact that in the teeth of this pandemic, the business community, the investor community, policy leaders around the world have responded. I mean, of course, there are going to be people like Greta Thunberg who are going to respond. That's normal. But is it normal for the largest asset manager in the world to put this at the top of his agenda? It's normal now. It wasn't normal before. And so this normalization of the awareness of the urgency of climate change gives me hope, because it is the first step to taking serious action. I believe we are going to do what we need to do, but it's not going to be easy.
I'm going to ask you in a second sort of 3 key takeaways, Karina, but before then, there is a question about where to find the document that you and I both mentioned. It's in the WEF, so if you easy to just Google WEF climate governance, and you will, after about 2 or 3 items down, you will find this this document.
And then pick up the phone to Sunita Rajakumar.
Yes,
Join Climate Governance Malaysia. No,
so,
seriously, I joke that this is the serious point. This is the place to go for help.
And so your 3 key takeaways, please. And then I'm going to invite Dato Sri Sunita just to join us for the last couple of minutes. Please.
Of course.
Karina.
My first key takeaway is that this is unique. You know, we cannot brush this aside by saying, oh, but, you know, what about the digital revolution? You know, what about the pandemic? The pandemic is disastrous. It will go. Climate change will not. It's unique, and it calls for a unique response. And part of that unique response is that business leaders have to step out of their lane. And this is the thing that's really uncomfortable. It is not normal for CEOs to walk around saying, we need policy change. We need to work together with each other, with competitors, right? And there's always this worry about anti-competitive behavior. And yet there's more and more digression. We need to work with competitors. We need to work with suppliers, investors. We have to work with others, because none of us acting alone is going to solve this problem. And so it forces us to get outside of our offices and talk to others to develop solutions. But thirdly, it's our problem. It's a problem for this afternoon after this meeting. You and I have things we need to do in the boardroom in order, and I don't just say to play our part, because yes, there's a duty to play our part, but in any disruption, there are opportunities, and there are fantastic opportunities. I just read this morning about the hedge fund managers who became, you know, hundreds of billions of dollars richer in the pandemic. In any situation, there are opportunities to be had. And it is, again, our job as directors to spot what our companies can be doing differently to come out the other side as winners. And there's no shortage of change in the context of creative destruction. There's innovation and there are opportunities, and we need to be focusing on those also, because this transition is going to put people out of work, and those people need to be employed. Communities need to be kept on side. We need to address this issue in the context of what is called the just transition. We can't allow people to starve because we're saving the planet. Even if we fail to save the planet, everybody will starve. So it's not a choice, but it's important to remember that there are pluses from confronting this issue and innovating and growing.
Well, thank you very much, Karina, Litvack, and the words are, you sort of said in the words of Sir David Attenborough, we are running out of time, but there is still hope. I'll bear that in mind. Can we invite, therefore, Datin Sri Sunita in?
Hi, Karina, thank you so much. You've been so inspiring. Do you know, I still remember 8th of November 2018 was when I met you at the Securities Commission. And you said, could you set up the country chapter? And I said, yeah. And
little did you know that it would take over your life, but it's honestly a pleasure and an inspiration to work with you.
You have been so motivating. It's just been wonderful. Anytime I message you, you're just there for me. And I wanted to just remind you, Karina, you need to do a shout out for the first ever global summit on climate governance.
Absolutely. Thank you for reminding me. The World Economic Forum and the Climate Governance Initiative together are holding the first ever global summit from the 22nd to the 23rd to the 26th of March. Thank you. 23rd to the 26th of March. It'll be an event with, it'll be a virtual conference with events in all the time zones. So although it's spread over 4 days, it's not 24/7. And Malaysia is going to be, Climate Governance Malaysia is going to be one of the leading presenters. And we are going to have company chairs, non-executive directors, investors, other experts helping us figure out what board directors need to do and need to do differently.
Yeah, we're very excited about that. There's been so much work in planning this event, and by non-executive directors, no less, although the forum is going to be hosting the opening and the closing event, correct?
Exactly. Yeah, that's
so
exactly right.
We're very excited
Yeah.
about this. Yeah.
Yeah.
So is there any closing notes that you want to leave us with before I invite the next speaker to come on?
Yes. It is easy to feel overwhelmed by this because the scale of the challenge is unprecedented. However, smarter people than I have worked out the numbers, and it can be done. And we have to remind ourselves of that fact. And it starts with small practical things that we can do tomorrow, even this afternoon, in our boardrooms. Just go through the checklist of things, and whatever your committee needs to be doing differently, there's help out there to figure out how to do it. And that's the real thing I wanted, was something that I could use, not another newspaper article or another webinar that told me that we are failing without telling me how to fix it.
Yeah, and for example, the legal opinion that we've got that says that you need to be so much more proactive about this, coming out of Australia and Canada. And of course, the Anderson opinion from IFRS, that has also been really influential as well.
Well, you're right. I mean, every board process has a climate lens. Accounting is one of the obvious ones. There's been some brilliant work done by a group of investors in Europe around the very issue of incorporating, basically testing and having the external auditors test the robustness of the assumptions that have gone into impairment calculations. That may sound esoteric, but if you tweak your assumption about, in our case, where the oil price or carbon price will be to align with the Paris Agreement, suddenly your assets don't look like they have as valuable revenue streams in the future, and you need to mark them down. And that then has a domino effect across a whole bunch of other processes in the business. Capital allocation decisions need to be made differently to take account of the fact that asset lives are going to be shorter. And in my company, that's exactly what's happened, is that we're shifting to oil and gas opportunities that have a much shorter payback so that we can extract cash as quickly as possible and funnel it into the new business. That's essentially the model. It's the old business is the cash cow. We are not going to invest in very large, complex, long-lived projects because they will be stranded. We are going to invest in the near field, incremental, high, not large volume, but high return, small projects. Scrape off the cash, plow it into the biorefineries, the biochemicals, the renewable energy projects, in order to, push the company into a different business.
Yeah, great to hear about the transition strategy. Thank you, Karina. Always a pleasure speaking to you. And now I am also delighted to introduce Per Grankvist, calling all the way from Sweden. And he's going to be talking to us about how he's using storytelling as a narrative to get governments and people to act. Per, over to you now. Thank you, Karina. Thank you, Johan.
Thank you. It's an honor.
Thank you. Assalamualaikum.
Thank you so much. Trying to start my video here. Let's see if I need approval to start the video. Start. See here.
Okay, just a minute, Per.
Here we are. Excellent. So this is working. Fantastic. This must be the question of the 2020 and 21. Is this working? Anyway, good afternoon. And let me start with thank you, Climate Governance Malaysia and the Institutional Investors Council Malaysia for organizing this important event. I also want to thank you for the opportunity to speak to you here today to provide some remarks on the challenges and opportunities that lies ahead of us today. So I want to address the two issues in the headline, what we need to know and what we need to do. And I want to share some observation on stuff that is boring along the way. And so I'm just going to tell it to you like it is, sort of fairly straightforward. So let's start with what we need to know here. I want to start with a little bit of bragging, but there's actually a point I want to make. As a journalist, I've covered sustainability for more than a decade. I've done profiles for more than 500 companies all around the world in all kinds of industries, just done in-depth reporting on how they focus on sustainability and profitability together. I looked at H&M, General Electric, IKEA, BMW, Tata Group, among many others. I met with CEOs and the head of strategy. I've been visiting factories all over the world, trying to understand how sustainability can be a driver to change. And I'm writing best-selling books and been invited to numerous universities to speak. So I'm bragging you to all this to help you understand that the conclusion I will now share on sustainability is well-informed and based on facts. Here's the thing, sustainability is super boring. And that is mainly because we talk about it in a really boring way. We talk about sustainability as something we ought to do, as something investment companies are telling us to do, because big funds such as BlackRock is telling you to shape up. And as companies, we in turn will call to however is in our supply chain and tell them to shape up. And sometimes we point fingers and say it's our suppliers' fault that we're not good enough. We will point to suppliers in China, Indonesia, and Malaysia and say it's their fault. This is, of course, a form of modern colonialism. We in the West, we've outsourced our production to the lowest bidding supplier in the East and behave like we've outsourced all the responsibility at the same time. So I will point finger at you and blame you for not following my code of conduct. It's the same with CO2 emissions. We might be lowering ours on paper, but that's partly because we've outsourced it to the Far East. So sustainability is boring because it's often talked about as an issue of morale, and because for some reason people who look like me seem to have an attitude that we're slightly better than you. And that's really boring and frankly quite an offensive attitude. As I said, sustainability is boring. Important, of course, but boring. It's a little like people from Sweden. We think we're important, but we always are a little bit boring. So how do we make sustainability less boring and more important, you ask? Well, it's easier than you think. Stop talking about it. Talk about how we use resources instead. That is what the 500 plus companies I profiled had in common. They all think about resources and how you use them, and that's it. So this is what I want you to know. Sustainability is all about resource usage. And the thing is, when you start to think about it, it's completely liberating way. There's an important formula here I want you to remember when it's about resource utilization. You can only use resources in two ways. One is smart and one is stupid. And that's it. Whenever you use resources in a better, smart way, you will make more money. You don't need a PhD in sustainability or finance because it's always true. Identify a wasteful way of using resources and fix it, and you will make more money. It's easy everyday task. You can go to a toilet, you can open the door, check if the lamp is on. If it's on and there's no one there, that's a waste of resources. Instant feedback, I like that kind of thing. And if you open the door, the toilet is occupied and someone's sitting there, you're just being rude. That's also instant feedback. And another thing, whenever you talk about resources, there's no barriers of language or culture, or religion or tradition, because deep down, there's more common sense that unites us than divides us. So if you're having problems getting heard with all your ideas on how you want your organization to become more sustainable, start talking about resource use, because that is about money. Following resource use is following the money, and that's what makes the world go round. Talking about resource usage rather than sustainability enables me to have conversations with people on the factory floor in China without problem, and at the same time have discussions with CEOs of companies that were buying products from those very same factories. So the more resource effective you are, the more profitable you will be. So if you want to invest money in a company, choose one that is more effective. And by default, they will also be more environmentally friendly and more sustainable, and perhaps even likely more climate friendly. The same applies to human resources as well. Treat people better and they will perform better. Treat women as equals to men and you will find that they are equally responsible. And this is a secret that Walmart, H&M, IKEA, General Electric, Nike, L'Oreal, BMW, and many others have realized. So the reason that the good people at BlackRock wants directors to be better at managing climate risk is because it's profitable first and sensible second. Wasting resources is always stupid. And who wants to invest in a stupid company? So the first thing I want you to know is that sustainability is boring, and that's why you should always start talking about resource usage instead. It's especially easy if you're on a board. You don't need to have the full background. You can just ask, are we using resources in the smartest way here? And by the way, things that looked smart a couple of years back might not be today. The first cars of this world were actually electric, but the batteries were huge and ineffective, so they switched it for gasoline instead. And today, the opposite is true. Let's move on to what we need to do. This is in a way an easy one. We need to change our behavior and stop wasting resources. The tricky question is, how? So when Sweden and the EU urges you to move more rapidly on lowering your emissions in Malaysia, I totally get you. Some of you ask, why? Why did we get to pollute the environment for decades in order to increase our standard? And why shouldn't we let you do the same? This is an easy one. Why should you? Why should you repeat our mistakes? Why should you want to be as stupid as we've been for ages when there are so many better solutions out there? All the technology needed is already available. It's the same thing we learned during the pandemic. We felt that now we're all this doing webinars and so on. This is not something new and smart. It's not. This technology has been around for more than a year. We just stopped working in a stupid way. That's what happened. So all the facts I will tell you that is the right way to do this, as I've told you, that's just common sense to move into this direction. However, this is another problem here. Facts are boring sometimes, and you want something to change, they are completely overrated. Presenting someone a set of facts will not get them to change. That's not at all how the human mind and human behavior works. Look at Donald Trump. He didn't rely on a single fact to become president. He just told us a better story. And in some way, he was right. The human brain is not designed at all to process facts, but stories. Tell people a story about anything, and they will remember it much better if you just present them with a PDF of facts. And by the way, if you use PowerPoint, they will probably not remember anything because PowerPoints are so often super boring. It only leaves the audience thinking, where's the power and what's the point? Whenever we talk about sustainability and climate change and the Paris Agreement, we hear people talking about how important it is and why everybody needs to do a bit and how everyone needs to turn around. And it's also really boring because it doesn't tell us what the future will feel like. We don't understand what we need to aspire to. And feelings are super important if you want to convince someone about anything. And the way our brain works and process feelings and stories and how they interlock is actually the answer to why it can be that the majority of blockbuster movies have essentially the same story. It doesn't matter if you like Star Wars, Matrix, Spider-Man, Harry Potter, or Lion King. It's all the same underlying stories. The story goes like this. Our hero gets a call for adventure. Initially, he rejects the idea, but then he meets a mentor who convinces him to try. He does take a leap into the unknown. Along his journey, he meets friends and foes and eventually makes it to a kind of a dragon's den or similar. There will be an epic battle. He will win it and then he'll return home. During that journey home, he will be transformed. When we come home, he's slightly older, but beyond more, he's sort of also slightly more wiser. It's called the hero's journey or the monomyth because all major movies are the same. All major books and operas and whatnot are basically the same. It's because we're wired that way. So let's compare the stories of Star Wars or Lion King, compare this story with the structure of, so that we have our city should become climate neutral in 2030. This story starts with us declaring a city should become climate neutral 2030. And that's it. Super boring. There's nothing anyone can relate to. It's something in the future. There might be flying cars. There might be thin white people walking along a street. We have nothing to relate to. So when the Swedish government set out this should be one of our goals, eventually they called me. As the newly appointed chief storyteller of Viable Cities, which is the biggest government-funded innovation program in Sweden and forerunner in sustainable city development in the EU, my boss asked me to work on developing a toolbox on how to tell stories about the future that is believable and thus feels emotionally true. Everything we claim should be scientifically true and based on facts on what we need to do to change, but it cannot be boring. I have a bunch of scientists working with me in human behavior and human psychology and sustainable living and all that, so we have the facts straight. But whenever we tell something, whenever we build a framework, we have to ensure it feels emotionally true and it cannot be boring. It also cannot be marketing, because marketing is pushing a message. It's not telling a story, and everybody knows the difference. I think everybody hates marketing more or less. And I think that when it comes to stating the future, we might just have been overselling the future, that everything will be perfect when it's not. So when we did the research and we've done a bunch of pilots by now, a couple of years we've been working on this, there's a few things that I want you to remember when telling a story about the future. The first thing is the story needs to be emotionally true. As a story about how a near future will feel like, that's something which it should not be too distant, but near future. And you should have a hero that will allow us to sympathize with them and understand their reaction. Some of you might think that, no, this is not for me. I'm an investor. I'm not a storytelling. You're dead wrong. We are natural storytellers because that is our brain, how it works. All children are natural storytellers. And it's then when we grow up and we think we start to have to wear a tie and wear a suit and pretend to be adults, it seems like that ability wander off. But actually it's not. It's there even if you don't use it in your professional life. I know this because we all use it in our private life to tell stories on what happened. Because if we don't, we are boring people. And I guess you're not. So tonight, when you tell your friends about this seminar, you mention me, you will not just give them the fact, guy from Sweden spoke for 30 minutes. You will tell them what you thought of me and the emotion you felt listening to me. And you will share with this what parts of this that felt to be emotionally true. And that's because we're hardwired to do it. In the movie Wall-E, came out a couple of years back from Pixar and Walt Disney Animation Studios, a garbage compactor falls in love with a droid. Doesn't seem like the most exciting plot in the world, but it's a fantastic movie. Partly because how they make sure that they tell stories on a human scale. And so when something happens to the droid that makes it go on standby, and it's impossible for the little garbage compactor to talk to the droid, and we learn that they've actually had some kind of love going on. So he starts to take her to watch the sunset and do other things that he knows she liked in hope that she will remember and somehow wake up from the standby mode. And it's such a sweet and touching scene that I often find myself in tears as I've seen it. And I've seen it numbers of times that you can imagine. Obviously, I cannot relate to it. I haven't been in love with a droid nor a garbage compactor, but I can emotionally connect to it 100%. So it all rings true to me. So whenever we tell a story about the future, we also need to place obstacle in front of the hero for the audience to feel with them as they get frustrated or angry or happy or fall in love. There should be something that they couldn't foresee that they can react to. And it's that reaction we can tie into. We did a pilot in Malmö where we were to portray a day in the life of someone using sustainability mobility services. And our main character, she gets a bike stolen fairly early in the story. The bike gets stolen out of the biggest mall in the city of Malmö. This is in the southern part of Sweden, at the Triangeln station. And everybody can relate to it because everybody who's from Malmö, we've all had our bike stolen there and we curse them. So, and when she does, we can completely feel her. And so the entire story makes sense. And also, when we're not overselling the future, we will have characters that are like people in the future, people who smoke, drink, commit crimes. They will be there in the future because people are still people. And that makes it the future springs true. So that's the emotional collection. The second point I want to make is that the story has to be rooted locally. When we talk about climate change and when they need to change, make sure it's rooted locally. Because everybody is from somewhere. Even though we might think that, no, I'm a global citizen, no, that's completely BS. They're not. Everybody is from somewhere. So as when I go somewhere and I always and give speeches like this, I try to familiarize myself with local myth. If I'd been in KL now, I'd picked up some local reference in this speech. You make it locally rooted, easier for you to relate to. It needn't be relevant to the story by se, but just the fact that sort of wink to the local culture will make this seem more true to you. So it's the same thing that we do when you tell tales to children. Sorry, when you tell tales to children, you need to make sure it's locally relevant. We did a study as part of this project where I studied how the forests in the background of the fairy tale Little Red Riding Hood was portrayed. I compared it from the versions from various European countries, and I can say that for example, in the French version of Little Red Riding Hood, they were big French oaks in the wood where she met the wolf for the first time. In the Swedish version, there were a lot of pine trees and fir trees in the background, and in southern Europe, there were more like olive groves and so on. The key message here is that it's sort of not to get lost in the woods. That's more relatable if the forest actually look like your own forest. So the local connection is always key. And we also need to make it culturally relevant. It needs to ring true to something that's about the stories we tell about ourselves, where we want to change for a better world. Visiting Umeå in the northern part of Sweden, I asked themselves sort of, what themes are always present in the stories you tell about yourself and your character in the city of Umeå? And two things showed up, the river and the mighty forests. So if we use that, rather than asking people, you need to go to renewable energy now because that's good for climate, it might be better to say that if you switch to renewable energy now, you will have the power of the mighty river of the Ume Elv flowing through your socket. It feels much more culturally relevant. And in Texas, they fought littering for years and years and years along the highways with zero efficiency. But then they understand, I mean, they present the fact you should not litter, whatnot. But then they try to understand who is littering. It was the truck drivers who were littering the most. And they understood that they are fiercely local Texan patriots when it comes to their home state. And so they introduced a new slogan, don't mess with Texas. And suddenly, the truck drivers didn't want to mess with their home state, and so they stopped throwing a lot of trash out of the window. And so I think that your Malaysian folk tales are no less magical or fascinating than the usual European fairy tales we read about. Forget Cinderella, Snow White, or even our own Swedish Pippi Longstocking. Your young girls should learn about strong Malaysian queens like Chick City Wan Kembang, and the twist and turn of the life of the Princess Bidasari, or the elusive Princess Puteri Gudrun Ledang, who lived up on a misty mountain and thwarted the actions of the king. Or when talking about being smart and resourceful, what might we learn from a character like Gill and the stories of the Willy Mouse there, the trickster, the wise one, the symbol of wit? He should be able to make money of sustainability, shouldn't he? Tell me a story, mother, begs the child, weary with the play of the day and ready for the happy hour just before bedtime. And her mother responds with this plea with some of the old favorite tales. Perhaps it's the tale of a fairy princess who ruled an ancient land, a talking mouse there who uses wit to get out of sticky situations, or even a dragon that lurks at the bottom of the sea. With the National Tell a Fairy Tale Day celebrated on February 26th every year in Malaysia, I think it's time for you all to take a look at the fairy tales built out of local myths and local legends that endure through the ages. They are the stories that need to be understood. They say something about the national, the regional, and the local character that they need to tie into in order to get people to change. What we need to know is that climate change is real, and that we can invest smarter in companies that are resourceful to combat climate change. What we need to do is to tell ourselves stories on how we overcame difficulties to live a better life, a life that we can relate to emotionally and locally, with low emissions and a higher quality of life. And when we do that, I believe we will live happily ever after. Thank you.
Yeah, thank you so much. That was really quite an engaging conversation to have on the effects of storytelling and climate change. Let's start with the idea that sustainability is boring, and that resource allocation, the conversation of resource, can be the more engaging and more felt experience in a story. How would you tell that story, the resource story, from a perspective of a board member? What hero's journey is there in the resource allocation story that could possibly be told? Let's explore that together for a second.
I think that it is in a way the most simple story. It's about whenever we use resources more intelligent, we will save money. Would you be against that, Mr. Board Member? And I sort of challenge anyone to say that they sort of come out against that. So I think it's sort of it's something in sort of breaking this complex issue down to its very core. It's all about resources, and then start there and sort of taking into account that people have different perceptions of what sustainability is like, or ideas if it's relevant or not. We can sort of take that into account. So how do we deal about resources? And starting from that, it's also a very inclusive conversation you can start to have. So sort of that story is fairly simple. And then you can, of course, use local examples of it, and you can sort of exemplify on how other companies have done. For example, the Coca-Cola company, they have now using resources more wisely. So the Coca-Cola bottle. Are we here?
Yes.
Yeah, good.
Yeah,
so I mean, look at the Coca-Cola bottles in Malaysia. They are now much thinner, use less plastic. That's why they're slightly more wobblier. That's an effective use of resource. So that's the core issue combined with an example is always a good thing to get your message across.
And you talked about the distinction between storytelling and advertising. Often we think of storytelling as just a new word that advertising has taken on. And why is that not true? Because you've touched on it a bit, that it's not the same. And that people's distrust on advertising is growing even greater now. Can we talk a little bit about that?
I think storytelling has much more of sort of magical sense to it. And that's why people in the advertising business, they want to aspire to that. But there's nothing magical about selling soft drinks or cars or something. And so I think they overcomplicate it and they oversell themselves. And it's simply not true. A good story always have a hero, and that hero takes a journey and has an obstacle and then returns transformed. And some advertising do come in the shape of storytelling, but that's not sort of the main thing. Storytelling is trying to convey something you could learn from, whereas advertising is getting you to buy the stuff you don't really need.
And how important is it for us to really begin to communicate that with board members when they think about climate change as a good PR move, as a good story to be told to make them look good in organizations, not as a fully engaging tool to affect change?
I think that we have to be honest that it has been a great PR exercise in many ways, and it could give you some short-term gains. But in the long run, they're just being fools. They're ignoring scientific facts, and they are so destroying the competitive advantage in the long run for the company. And so also, there's something around this, the sort of telling it like it is. If someone is a fool, you might not say it to them straight, but that should be the message to come across. It's not about taking one side or the other side. It's about either you're on the side of facts or you're not. And if you're not on the side of facts, you do not belong on board, full stop. The world has changed. So we need also to be a bit sort of humble. Not everyone has realized this, but now presenting the facts, looking from a resource perspective. Again, you can see how I always try to steer away from being sort of the morale and you should and all that, which is something we Swedes are sometimes very prone to. So sort of a lot of the experiences also coming across as full of ourselves is something I've done myself pretty much actually until I realize it's not very effective storytelling.
And I appreciate the fact that you've said that often the conversation on climate change from the West is driven by the sort of telling down to other economies that are catching up with progress, right? So certainly the question of whose story are we telling when we are talking about the climate change? Has the world been dominated by Western stories in terms of the urgency of climate change? Or is that just really just an irresponsible argument to be made by us at this present moment of urgency?
I think it's not irresponsible. I think it's a human reaction. I mean, if I come across and say sort of, okay, Raymond, you need to do this and this. I mean, I come across as I'm your father, and you sort of instinctively want to say no to your parents. So I think it's sort of that approach doesn't work. You have to understand it's all about the common resources and find what's common about it, and realize that something that we find that common sense might be completely crazy to in other nations as the opposite. But as it's sort of generally speaking, when you come across it, here's what you need to do. You might want to shift the conversation. Okay, what's the objective here, and what could be the different routes going forward, and then taking considerations of the cultural aspect of it, because we know culture is strategy for breakfast. So why shouldn't we take into consideration sort of culture? But then again, that is not sort of saying that now the nations that are developing rapidly should take the same route, or that they are not doing the same thing. Everyone should do that. Let's focus on the goal instead, and then be sort of a bit more humble in saying that everybody should find their path forward, and we should have the same higher goals, but the same different path forward.
How do we have different storytellers in the room when we are dealing with a global climate change? Like, how does the West engage with the rest of the different levels of the community at a global level in hearing that story? And have you done that before? I mean, like, I think it's a really interesting, it's a really, I appreciate the fact that you brought this up, but the follow-up question is how have you engaged that story then with the other parts of the world? How have you brought other people into the room to hear their stories at different levels of the climate conversation?
I mean, it's always difficult to hear the stories of the people who are not in the room, but maybe that should be a constant check-in to ground yourself. Are we having all? I don't really like the word stakeholder because people are human for and most, but sort of, are we having all the perspectives we need in this room, or are we sort of doing this business as usual? I think that's one way of saying it, and another way is sort of understanding it. Okay, what effects do climate change have locally that connects that global story and thus makes it sort of relevant? Global things, nobody cares, but global things, it's too abstract. We're sort of our brains cannot process that. That's sort of PowerPoint management speak, and we all hate that. So we have to be very concrete and then say, okay, so this is happening, is a flooding in this area, and who lives in that area? What stories can they be telling us? What sort of, how can we make this relevant to them? And the key here is how do we make it relevant to them? Not how do we communicate this to them, but how do we make it sort of feel true, ring true in their ears when they hear the stories about what's need to change, and also the story about what could be the future. Sometimes we talk so much about, for example, electric vehicles. Oh, in the future you will just have to trade your BMW to a Tesla. It's an easy fix. Sure, but how many people can afford those cars? And so we get sort of trapped in it also to this economic sense, economic injustices and social injustices. And I think in a way, the story about the climate and how they affect us and who could talk about it has been very simplified, and in many ways coming from a European or North American perspective.
And you told a great story about the bicycle issue and how it's connected to how people have this visceral empathy for the bicycles that they have all sort of lost in a rampant stealing of bicycles in the town, and how just adding that one thing draws empathy to the drive, right, to the whole story. And how do we do that more and more? So I think it's quite clear, like, how do we begin to curate our experiences that are connected to more localization of our stories? How do we do that more effectively? And is this a responsibility for boards to think about at all?
In a way, no, because sports might not be on the ground level in that way. But on the other hand, absolutely, 100%. Because if you don't understand it yourself, even as a board member, you come from somewhere. So start sort of familiarizing yourself with what are the impacts locally? What are the impacts in your neighborhood of KL or wherever you're from? So it can be felt everywhere, because this is a global issue, but it's felt locally. So that's where we need to start. And when we do it, we might just want to drop the tie a bit and be on this sort of same level as everyone else, just to be able to listen to it. And it surprises me how often I ask a question, so what should be the elements of a good story that says something about this city or this neighborhood? And people instantly would know that. And I think so. It's also a question of asking. I mean, I'm often joking. I'm brought up in a small peninsula in the southern part of Sweden called the Bjäre Peninsula, and there's another peninsula sort of 10 miles away. And sort of course, we think they are inferior, and they think they are better. So there was this fierce debate going on. And so, in that respect, if you would do it in my hometown, sort of just being slightly better than those guys could be a completely viable argument. And so a local store close beer, at least we're not like those people, and it's fine, whatever gets you going.
When you bring the obstacle more localized, we can feel it more central, which brings the point to the obstacle of climate change, which is so huge. It doesn't feel that there is a singular hero taking on that journey. And this is probably one of the biggest problems, right? The obstacle of climate change is not, it doesn't feel tangible enough when we talk about it in facts and scientific terms. And so that our job as storytellers is to constantly bring the obstacle closer to home.
And exactly, I mean, a very good point indeed. And then thinking that maybe there isn't one hero. Every story has to have one hero. It can't be a bunch of them. It's too complicated. But in the story of climate change, there are actually millions and millions and millions of heroes who does things every day, think about the environment. If it's not they're not throwing trash anymore, or they're recycling more, or they've just sort of done the two biggest things you can do as a single individual. And especially the richer you are, the more important it is. You should have to stop consuming as much, and you have to stop eat as much sort of animals as you used to do. That's the simple things. And I think as investors, as board members, we also have to realize that I have to start somewhere. I have to start sort of ditching cow milks and go for oat milk in my coffee or whatever. I have to start sort of eating meat a little less and see what it happens, see if it's difficult. That way you can relate to it. And if you don't, it's like being a board member of a company, and then you say, well, I don't use the products. I have no idea. I never talked to a customer in my life. Then you have to have the customer perspective. And when it comes to climate change, you also have to have the perspective of what's it like? Is it difficult to find an EV around here? Is it hard to be doing car sharing rather than having a car of your own, or whatever the sort of problem might be? There's different in cities than on the countryside. but just being sort of curious and trying to understand. It is your damn job as board members to be open and see what's happening. And if not, the company should die. I mean, because then you're not adapting fast enough. This is the biggest change we've seen in decades. And so how can you sort of be, I'm skeptical to it? No, you're not skeptical, you're a fool. Because you're sort of ignoring it. And I think that is sort of you need to be curious. And if you're not curious, step aside, please. And I think we sort of just go out there. You should go out and see what's happening. I mean, there's a neighborhood around here. It's really cold in Sweden today. It's snowy and so on. So, but if I would go out here and talk to people and said, so how do you feel climate change? They would probably not feel it because it's snowy today. But just start talking. Do you feel it? And then there will be something that says, yes, we had problems with getting oranges now in January because something happened in Italy. Well, then you asking questions. That is the only way to learn something. And that is the only way to frame something locally.
When we think about the story of climate change, we often talk about it in very gloom and doom terms. Karina brought it up in the last panel. And is there a hopeful story or should we be talking about more hopeful stories as well? Because there's a lot of innovation that's happening in the world that is attempting to address. A lot of young people are creating innovative products that are attempting to address. And how urgent is that for us? How urgent is it for us to connect innovation to storytelling for climate solutions and to bring that stories out faster so that we counteract the sort of tiresomeness of the gloom and doom projections of climate change?
That's a really good point you're making there. I think I'd sort of first story is the sort of the story in the first person. If you do something, however little that you'd experience, that's something you can tell. That's very credible. So I got here by an electric car today. Okay, so that's something I can relate to, and that's a story I can tell. But then a story needs to have a lesson, and it needs to be a story about that we can have a higher quality of life with lower emission. That technology is already here. So let's start talking about that. But let's not fall into the trap of advertising. So maybe we need to think about those obstacles, or we need to think about them with thieves and crooks and people who commit adultery in our stories, just to show that it's actually a world we can relate to. I'm fighting hard to getting people to smoke whenever we do things, because it's sort of, that's something people do. People have a drink, people smoke, all that. So it should be part of the story, so we don't fall into the trap of advertising. But I mean, I'm hopeful because I meet so many people that actually does a lot of things. And even though this might feel like a huge shift in society, it's actually not sort of shifting behavior. It's more like, think about it more like scaling behaviors. There are already people who are living within the planetary boundaries. And so let's look at them. Let's see how they do it. And then have a story that will give you the lesson that this is actually a scalable behavior. And so people will see if the story is set in a near future that looks similar to ours. Oh, that seems to be possible. And I think we forget about that. It needs to be possible. So having a documentary approach whenever we do stuff, that's an important part of our framework.
Also, the question of feeling that it is possible, because sometimes when we talk about the technology and the future, it feels so improbable. Malaysia, a couple of years ago, a minister had declared that we were going to invest in flying cars. And it felt so improbable for the rest of us that we thought it was a joke. It was a joke to aspire to even move in that direction, because the probability of it didn't feel tangible for a country like us to be aspiring to. So how much of the conversation about the technology and imagining the future, how much of it has to be, where is the probability line that we should explore?
Well, it has to be feel emotionally true. It doesn't mean to be true at all, but it has to be emotionally true when you tell a story how you overcome obstacles in that sense. But I also think we need to tell a story from a human perspective, from a sort of on the ground view. I mean, I understand that sort of Sweden and Malaysia is similar in the way that sort of we sort of rely on government to do things. Government should say something, and then they should take care of things. And I often bring this up when it comes to obesity. There's this whole issue in Sweden whether we should have a special tax on soda, a sugar tax on soda, so that will allow people to drink less sugary sodas. And that is a solution, but a simpler solution is that you just close your mouth and don't drink as much soda. But that sort of rely on the citizens. And that seems boring. And often when we talk about climate change, we talk about, okay, you can never have a car, you can never have beef, you can never go on vacation to wherever you go to vacation again, because that's flying. So we need to tell a story about it's actually possible to have a high quality of life. And when you have a high quality of life with low emissions, there's a number of things that has to go into it. So keep it low, keep it sort of on a normal human level, and also, again, include those. Of course, there can be some difficulties and some annoyances, but we're eventually going to get there, and that is relatable. And then when it's relatable, the hopeful message that we might send, it's much more powerful. It feels that, okay, this can be done. I've seen it on the internet. I've seen it on a YouTube movie, so I believe it to be true.
Yeah. I just want to remind everyone that the question and answer chat is there. So you can, if you have any questions, please put it out there and I will read it out. In 2001, when 9/11 happened to America, the commission that did the report on 9/11 said that all the signs were there, but they had the failure of imagination to see the kinds of impact terrorists could have to flying planes into the building. The same line, failure of imagination, has appeared in the pandemic. Has resurfaced here in the pandemic. They had all the signs, but the failure of imagination to take initiatives. I feel that we are at the crossroads of a similar situation with all the signs, all the facts available, but the failure of imagination to understand how to interact with that, truth. And what is the task of imagination, right? Because you work in that sphere so much as someone to tell stories, right? How do we begin to sort of understand the context that we are facing in the context of imagination, that the future is calling us to imagine new possibilities about the way we eat, about the way we live, about the way, these are all imagination questions, right? But we don't talk about it in that terms, right? If we think about 9/11 and if we think about the pandemics and we're saying it's a failure of imagination, what does that really look like for us?
I'm not sure if I have any good answer to that. I think it's you get a little high on your own supply, I guess. You sort of tell yourself lies. I wrote a book on lying, so I know that we foremost lie to ourselves. But I think also we need to celebrate that, sort of break that vision down into tangible steps. I don't think anyone in this room would imagine Petronas saying that they will be climate neutral in a few years. A few years back, that would seem completely ridiculous. And suddenly it happened. Why did it happen? Obviously, the board of directors had the imagination to say, okay, why not? It could be BlackRock who put pressure on them. It could be that they have their own light of imagination. It doesn't matter. But they did it. And once they've done it, then that sends lots of signals down. I mean, I'm very proud of what the H&M has done in order to sort of fixing living wages and sort of sustainability. They're not perfect, but they've said something and everyone, what did H&M do that? Then we need to. So there's also the imagination of doing a sort of a symbolic action that in itself do not have any consequences at all, but realizing even the little small things. And whenever you say someone, oh, it doesn't matter if I do this, so it doesn't matter if I do this in the grand scheme, that's a person with sort of lacking imagination. Because the future is not there at all. The future is being constructed now. And also the future is already here, a little unevenly distributed. So it's about finding that pieces of future today and lifting up, exploring it. What does that look like? And then again, making the dictionary, trying to be tangible. We only understand things we can touch. That's the basic human thing. We understand things we can touch. If I say that I'm working at the factory, this is a factory, you used to be a factory, they made porcelain cups here. You feel nothing, but I feel, then it's suddenly true. Really? I mean, it's a silly exercise, but that is how it works. And I think we need to be sort of bring it down to level. Do not run around with ties or too much, and trying to be a human being and tell it like you would tell your children or a good friend who has nothing to understand it. That's always my advice. It's like when you're WhatsApping someone, that's the kind of the sort of the reason you had it works very broadly.
There's a question that's come up: is the sustainability efforts merely greenwashing?
No, they're not. They are essential to the survivor of your company. And if you're not going sustainable, you should and will die. That's the future of companies not embarking in this. This is like a company saying we distrust the digital revolution. Electricity is not for us. It is that stupid because this is all about resource use. And if your strategy is to use resources less efficient, stupidity.
And why does, and this is my final question, why do we like stories that have a happily ever after? What is the brain's proclivity to a happily ever after?
It's because we use stories to tell us something. On the savannah, a story told, okay, so I should be afraid of lions. Or in this Little Red Riding Hood, so you shouldn't go around in the woods by yourself, especially if you meet a sort of a talking wolf. Be slightly sort of wary of those. That's a lesson, and that's a shortcut for us. And in our brain, there's actually a energy-saving device. Oh, Raymond did something. Oh, I should remember that. So that's why we sort of, I felt something. That's why movies without sort of any plot or any sort of good ending is sort of suspended midair. We don't like them. We need to get that sort of closure. We need to get the hero coming back transformed, or there will be a big celebration or a funeral if it's a bad story. But we will still learn something from it. So if you don't have the learning element, then the story is generally boring. If you think about your friends, the boring of your friends, because everyone has those, they tell stories. This happened, this happened, this happened, this happened. No point. So why should you? Whereas good stories have to, sort of, they draw you in and they say something. So giving that closure, I will now teach you something. There's something you haven't understood about the future, how you could live a high quality life with a low emission. Hang on, let me show you. That is sort of irresistible to the human nature. And that's why storytelling is so powerful.
Indeed, it is irresistible. Thank you so much, Birgit. I will now like to bring in Datin Asanita, who is going to transition us into the next.
Thank you so much, Raymond. Thank you so much, Per. That was so fascinating and entertaining. Really, really appreciated your contributions today. I'd like to invite Leah to give us the thank you note and to wrap up this session. Thank you so much, both of you. Please hold on a minute while we try and get Leah on board again. Leah? Hi, Leah. Will you be able to give us the closing note?
Yeah. Hi. Hi. Good evening, everyone. Let me see. Okay. Hi, good evening, everyone. We have now come to the end of today's webinar, and I believe everyone has an interesting day hearing the valuable insights and knowledge sharing from our distinguished international speakers who are experts in the subject matter. After listening to the speakers for almost 3 hours, I hope we have better understanding on what we need to know and what we need to do, especially as investors and board members, and to take climate change and sustainability issues seriously. We cannot deny the fact that climate change and sustainability agenda has now become important, especially at the times when globally we are facing the COVID-19 pandemic crisis, which have impacted the businesses as well as our daily life. We have to open our ears and our eyes and change our mindset in looking at the importance of climate change and sustainability, the risks, and what measures taken to mitigate those risks. Companies and board have to take cognizance that investors are now placing high importance on how companies deal with climate change risks and ESG practices, especially relating to human rights, health, safety of employees. It is not about having well-crafted policies, but more on how these policies are implemented and how board play its role in monitoring and ensuring they are effectively and correctly implemented by the company. However, it should not just be the role of the board and investors. Other relevant stakeholders such as regulators and government to have to play their role. It is a journey that need to be taken seriously no matter how long or how difficult. I will not take too much time in commenting the issue presented at today's webinar, as today, as all of you are aware, is the Eve of Chinese New Year, and I'm sure our friends our Chinese friends are looking forward to have their reunion dinner under the new norm. Most importantly, on behalf of the Institutional Investors Council Malaysia, I would like to thank all the speakers and moderators for taking time out of their busy schedule to share their knowledge and expertise with us today. I would also like to express our appreciation to our partner in this webinar, Climate Governance Malaysia, particularly Dato Seri Sunita, for arranging the speakers and for coming up with a good program for this webinar. Thank you everyone for your participation, and we at Institutional Investors Council look forward to your continuous support in our future events. Before I end, I would like to take this opportunity to wish all our Chinese friends who are present at this webinar, Happy Chinese New Year. May this year of the ox brings us the strength to face the difficulties and challenges that comes in our life and make our planet a better place to live. With this note, thank you, take care and stay safe always.